the thank you. The presentation will be recorded. We got a question in the chat, and I was a bit distracted by that. So my parents came here, smart people, entrepreneurial, but I feel as if they could have gotten more out of the Dutch financial system if they had someone who could guide them, who could assist them. So in other words, if they knew me back then, I could have assisted them. Another reason why I started this, I was working at one of the big banks, and I saw the need to assist expats in a different and better way than what was currently available. Enough about me. Next to me is my colleague Robin.
Yeah, good evening, everybody. And again, as everybody said, thanks for joining. Let me give a short introduction about myself. I'm Robin Uijtdehaage. So now you know how to pronounce my last name. It's a typically Dutch, hard to pronounce last name. I am from the Netherlands, born and raised in Amsterdam, mainly in the southeast of Amsterdam, which is kind of a melting pot of different nationalities, cultures, and everything, and that already always sparked my interest significantly. And well, similarly to what Sezer just mentioned, is that you can see that there's a lot of potential, but indeed the Dutch administration and paperwork and banks, it can be such a maze that it's really hard to get through there if you don't know your way around it. It sounds daunting, it seems daunting. It doesn't necessarily have to be as long as you know your way around there, and that's what gets my blood pumping to help people understand the potential and understand what you can do in the Netherlands with your finances, to have it help and to have it work for you essentially, and just first off, not only buy to let, but also residential mortgage, just to find a house where you come home, kick up your feet at the end of a long days of work. And yeah, that's really rewarding when you can see people getting there, and that's remarkable to be able to do that. I joined in 2017. I think about 6-7 months after, and that was really nice to see the company grow and to be part of such a nice endeavor. So that's those very good. And then there's the one other person of our team, Egle. Shall we do the introduction, or shall we to do so?
Let's do the introduction.
Yeah. So Egle joined our team 2.5 years ago, 3 years ago almost. And she has been one of the best choices we made in Mr. Mortgage, our magnificent marketeer, helping us getting on a map of and to let us know you lovely people, to help you as well in the market of finding your property, whether it's your residential property or it's the next step and looking into the investment possibilities there as well. So grateful as always to Egle, our rock right there. So I think we can proceed with our presentation.
Yeah.
So I'll pass it back to you, and we'll.
I'll be sharing my screen because we do have a presentation prepared. So buy-to-let mortgages, how to invest in Dutch real estate. We already had the introduction of Robin and me, so skipping that. What we'll discuss today: where to start, what are the requirements, finding a property, the Purchase Protection Act is a topic we'll shortly discuss. Taxes, savings, keep to let, return on investments, and at the end we'll have a Q&A where we will answer all the questions that are already popping up in the chat. To begin with, what our aim is today is just to guide you and educate you, so you know where to start. If you have any very specific questions about your case, feel free to schedule a short call with us. We'll also share the details on how to schedule a call with us. And another thing is what we want to do today is mainly to understand how buy-to-let mortgages work in the Netherlands, and also if it is the right option for you. You already know this, but it's good to keep repeating this. A buy-to-let mortgage is not a residential mortgage. We will be explaining what the differences are, because there are quite some differences. Obviously, there are also similarities, but there are also a couple of huge differences. What is buy-to-let? A buy-to-let mortgage, you just have the intention to, when you purchase a property, you have the intention of renting it out. And this is also how a bank is going to approach it, as an investment, and with you being an investor. If you buy a home for yourself, then the bank is obviously not approaching it in a similar way. So where to start?
Essentially, you can ask yourself 3 questions. Why, what, and how? What this means is why. Why do you want to invest in real estate? Is it because you want to, for instance, have passive income? That's a major kind of a magic word almost. Or do you want to grow your current wealth already? Or do you want to diversify on your current investment portfolio, for instance? Then you also have to know what do you want to invest in? So what property? What is your goal? What is your target audience? What kind of tenants do you want in there? And how, of course. So how are you going to finance this? Obviously, we'll let you know the kind of the more of the details of the buy-to-let mortgage, so the investment mortgage options. But also you have to consider, okay, what part of your potential financial means do you want to use for this purpose? Now, for this, we have a small poll. Karim already shortly introduced this at the start. A short poll for you that will ask you to fill out with a couple of questions to kind of get an idea where you are. So if you feel comfortable doing it, you can fill it out. Just the 2 questions. And that kind of gives us an idea of what your goals are and in what area you're planning to potentially invest in. That will have an effect later on where you want to specifically invest, but that's something that we'll get to later on as well. And then I'll just wait until, because I can't see the answers, that's something that Karim can see. But Karim, I trust that if you say, yes, let's move forward, then we'll move forward. I'll just give it a bit more time.
I see a tremendous amount of answers coming in.
There you go.
Let's just
great. Thank you.
I'll give you.
Thanks, Karim, and thanks everybody for filling out the poll. So let's move forward. So there we go. Yes, there we are. So what are the requirements? So what things do you have to consider when considering investing in real estate? I already mentioned why, what, how. And again, we cannot stress this enough. A buy-to-let mortgage is not a residential mortgage. Now, why we show this again is because there are quite some differences, and they're laid out right here. Now, when you buy a residential property, that's when you're going to live in it yourself. Now, banks usually, and with some exemptions there, but that's really not for now, you can finance up to 100% loan to value. So that means that you buy a house, the property value will be determined, and given the fact that you can afford it, of course, then you can finance up to the full value of the property That is different from other countries in Europe or anywhere in the world, really, where you can finance up to 80 or 90%, for instance. So you always have to input 10 or 20% of your of savings in the mortgage. In the Netherlands, when you buy a residential mortgage, that's not necessarily the case. When you buy a buy-to-let, when you buy an investment property and take on a buy-to-let mortgage, that is the case. It's a bit more detailed than specifically this, but just for the sake of this explanation, you can finance up to 70 to 90% of the property value. This property value is not the regular value, but the value in rented state. You can imagine that if you buy a house and you're going to live in it yourself, you take very good care of it, of course, and the mortgage payments will be coming out of your monthly paycheck. Now, when you have an investment mortgage, the monthly mortgage payments are mainly dependent on the tenant's rental payment. So that's already less of a security. Then also, you don't live in the property yourself, but the tenant lives in the property. Usually tenants tend to take less care of a property because it's not their own than somebody else. So therefore, the property value for a property in rented state is always a bit lower. This has to be determined by an appraiser. So somebody goes to the property and determines what the value is. And this is partially based on the rental income as well. So essentially what it means, a property in rented state, the value is a bit lower. From that value, banks can usually finance up to 70 to 90%, depending on the bank. What this means, in short, is if you buy a property to rent it out, you usually have to input some of your personal savings. Now, that makes sense because that's what investing is as well. You input money to have it work for you. Now, one other thing is that you might have heard about is the transfer tax. So when there's a transfer of ownership, so the property is owned by somebody and then it transferred to your ownership, there's a tax involved. When you buy a property for your personal use, so you're going to live in it, then the property transfer tax you can see on the left is 2%. Now, as of this year, so the 1st of January 2023, the property transfer tax for buy-to-let or investment property, in any case, if you're not going to use it for your own use, then the property transfer tax is 10.4%. It's good to keep in mind. Now, and lastly, the interest rates. Of course, with a residential mortgage, the interest rates are the regular interest rates that are available right now. Now, basically, the interest rates for a buy-to-let mortgage are approximately 1% higher than the regular rates. So that's a short comparison of residential mortgage and buy-to-let. Moving forward. So what variables are taken into account when calculating your mortgage capacity and the mortgage application at a bank when you go into a buy-to-let mortgage? First off, the purchase price of the property and the value of the property. What we just mentioned, the value of the property, that determines in the end what amount of mortgage you can take out. That in turn means that you have to do some down payment. So that's what I just mentioned, 70 to 90% of the value of the property you can finance through the bank. So that means that you have to input at least 10 or 30% of the value of the property. Now, the more you input out of your personal savings or out of the assets that you have available into your mortgage, you can imagine that if you only take 50% loan to value, so you only take a mortgage for 50% of the value of the property, you pose less of a risk for the bank. So that means if you take on a lower percentage, your interest rate will be lower as well. So that's a balance to find right there as well, to see exactly, okay, what makes sense to input in your personal, from your savings to get this whole thing started. Loan to value ratio is that exactly, and the rental income obviously will be considered as well. When it's a good investment, obviously you want to have passive income. That's one of the options, of course, and that is part out of the rental income. So you want to have the rental income cover the monthly mortgage payments comfortably, because then you make a profit, and that's the whole goal of investing, of course. Then your personal finance situation will definitely also be considered. So the first four bullet points that you can see were mainly focused on the property itself. And that's also kind of the main thing of buy-to-let mortgages. Those are focused on the property. So what is the rental income? What is the value? What is the perspective in the future for this property as well? But next to that, also your personal finance situation will be considered. So what is your income? Can you cover a moment that you don't have rental income from the tenants? Because that can happen, right? So somebody, or they don't pay, or you're in the middle from one tenant to another one, that you have 1 or 2 months you don't have any rental income. The bank wants to know that you can cover that as well, either out of your income, so from your job or your self-employment, or from savings that you have available. So those are all things considered in this whole calculation. Next up, finding the right property. Obviously, that's a big thing as well, because in the end, you have to know what property has potential to rent out, where there's sufficient demand to rent out your property, of course. So a couple of things to consider. Who is your perfect tenant? That's something that you can consider yourself. So do you want your tenant to be a student? Or do you prefer to have a family home? Or do you want singles or couples? That all makes a difference in looking for the property and also considering what kind of field you're looking into, of course. Now, it's always wise to work together with a real estate agent. Why? Not necessarily only to find the property, because you know how to work Funda, probably the biggest housing website. But a real estate agent can also help you understand the market and kind of already have an estimation of what the property value will be, or maybe even what the expected rental income would be. Not in the least, if you put in a bid, it will be taken significantly more seriously if you work together with the real estate agent, because then they know, okay, sure, they work with for one financial specialist and also a real estate agent, and then the seller will know, okay, these people are serious. We prefer to go with people that we know are already well informed, are taking this seriously, than somebody like a lone wolf just putting in a bid and let's see what happens. So that's definitely wise to do. Choose a location that is based on your type of tenant, what we mentioned before, to first determine your perfect tenant, and then also base the location on that. And check regulations and requirements if the property can be a rental property. And that kind of leads us to the next point as well, the Property Protection Act. That's one of the things. Now, one other thing is if you buy an apartment, for instance, if you own an apartment, you'll be part of the homeowners association. That's also something to consider, and something that your real estate agent will also help you out with, is to see if the homeowners association allows you to rent out the property that you own. It seems a bit odd that you cannot rent out something that is yours. Sometimes it's stated in the rules and regulations of the apartment building that you cannot rent something out, but that is luckily a minority. But the Property Protection Act is definitely a big topic to consider. You might have heard about it as well, and let me show you what it means. Well, Property Purchase Protection Law, and these are 4 examples. So you might have heard about it. So as of 2 years ago now, there's this act started where the government wanted to encourage first-time home buyers starting buying their first home in the Netherlands, and usually, well, always actually under 35 years of age. They want to encourage people to buy their home and make it more possible for them. So as of that moment, the transfer tax for investors was increased. So to have a bit harder to invest in property, or you have to invest more at least. One of the other things is what you can see right here. So each city, or different cities, not every city actually, but these are 4 examples of cities that have this limit, under which if you buy, for instance, in Amsterdam, if you buy a property for under 533,000 euros, you're not allowed to rent out the property. You have to live in the property for at least 4 years as your personal residence, and then you have the possibility to rent it out. So you're not allowed to do that if you don't. This only applies if you bought the house now or from 2 years ago. If you already own the property, let's say 5, 6, 7 years ago, you already owned the property and now you want to rent it out, that could be possible. But then these are definitely considerations to make when you buy a new property, and especially the location that you buy it in. You can see Amsterdam for 533. That's already updated for 2023. So this is for this year. The other cities have not updated their numbers for this year yet. So it's always every year they redetermine that specific amount, the specific amount that they will, what their limit is for, and probably will increase a bit because property values increased last year or the year before as well. And this value, by the way, is the WOZ value. That's something that we'll walk you through when we actually get there, but the WZ value is the value that the municipality gives the property, determines the property value to be. Something we can dive into later on in a personal call as well. Basically, this is good to keep in mind. If you buy a house for under this amount in one of these cities, then they don't allow you to rent it out. If you buy for over this amount, then there are possibilities to rent it out. Now, taxes, and this is where I hand it back to my valued colleague, Sezer. It was lovely, and see you next in the Q&A.
Thank you, Robin. So taxes, you probably have, or let me rephrase that. When people come to us with their buy-to-let questions, we get a lot of questions about taxes. You need to consider a couple of taxes, and the 2 at the bottom are for most of you most important. So you need to pay property tax. You own property, so you need to pay property tax. This is also if you're also doing that with your own home. Property transfer tax is also a one-time fee. The property tax is an annual fee. The property transfer tax is a one-off, just when you purchase it. And then you have two options next to the municipality taxes that you also have to pay. The income tax and the capital tax. Depending on how big your portfolio is, if you are employed next to having rental income, you either need to pay income tax or capital tax. If renting out homes or properties is considered by the tax authorities as your main income, then you'll have to pay income tax. And then you have the two income tax brackets that you probably know of as when you're employed. If the rental income is not your main income, and it also cannot considered a job, then you have to pay capital tax. And how much capital tax you need to pay is always a bit dependent on your entire situation in the so-called box 3. In other words, how much assets you have in total versus the debts that you have. Looking at the options that we also get a lot, keep to let versus buy to let. Usually people come to us with questions about buy to let, but then it's actually about keep to let. So we also wanted to touch on this topic shortly. Buy to let is when you purchase a property and rent it out. Keep to let is you currently own a property and you want to move to a new home, but you want to keep your current one and rent it out. So the keep to let. So that's the biggest difference. Keeping the current property is beneficial in most cases because then there's no transfer of real estate. In other words, you don't have to pay the property transfer tax of 10.4%. So keeping your current home, moving to a new home versus buying a new, keep living in your current home and buy a new home to rent out. It's easy to calculate what is more beneficial. And usually what we see is that with the keep to let scenario is that people already have equity in their property, so they don't have to pay down or pay down a lot. So you're going to invest, so you also want to know what is then the return on investment. There are a couple of ways to approach it. We usually use the net return approach. Just to give you an example, on the left side, and this is also touching upon the topic that Robin already discussed. Who is your ideal tenant? What kind of property matches that ideal tenant? And what is the expected return then on those types of properties? Usually what we see, and this is also good to consider, is there's no good or bad, in a sense that you see on the left side, if you buy a cheaper priced property, you see a net return of 4.27. On the right side, you see 3.38. It doesn't mean that one is bad, one is good. It can also mean that the right one, and this is usually what it means, is a safer bet. A safer bet means that you're not taking too much risk, and therefore you can expect the return to be lower. So yeah, this is shortly on the return on investments. What we're going to share, and that's also good to realize with everybody that's attending today, we're going to share, we're going to send you an email, and in the email you can find a link where you can calculate, we've built a tool, but where you can calculate the net return, the gross return, the cash on cash return specific to your situation. And if you have any questions, you can always contact us to discuss. And in that tool, you can also read what does net return mean, how do we calculate it, how does it work with the cash on cash return. There are a couple of other things to consider as well. So how a bank is going to approach any application from your side is that with most banks, there need to be a margin of 25% between the rental income and the mortgage payments, because the bank is considering 25% as a safe margin. So just to give you an example, if the rental income is 1,000 euros, then the mortgage payments cannot exceed 750 euros per month, because then you have the 25% gap. Why the bank is doing that, and it's also good for you to consider maintenance. That is because you're the owner. That is something you need to pay for. You have taxes you need to pay. You also want to save up for example, a period where you're changing tenants and maybe the property is empty for 1 or 2 months. So these are all scenarios where you need to have a bit of a buffer so you can pay for what needs to be paid. And 25% is a safe margin. Some banks are using 20%. So there's always a bit of a wiggle room over there, but that's something we can guide you through. Just shortly, how does our pricing work? Yeah, we have 2 options: buy to let, keep to let. Buy to let is a fixed fee, and it's based on success. The success fee is 2,999, in other words 3K, just to keep it short. What you're getting is all the right calculations, the mortgage advisory with all the different examples. We work with 9 buy-to-let lenders or keep-to-let lenders, so there's a lot to choose from. And then in the end, we also make sure that the mortgage application gets approved, and you pay us at the end. So with a success fee. Keep to let 2,800, 2.8K. You're getting exactly the same, but it's a bit more easier to handle. And that's why you see a discount of 200 euros. Yeah, so just to skip to the Q&A. I think Karim is going to join us again. We also have Egle that is joining us. Robin is also joining me. So you guys are having a full team of 4 people that will help you with the questions that you put in the chat.
Hi, hello. So we can start, I believe, right?
Sure.
So I'm going to ask you a first question. So the question is like, if you are planning to relocate and you already have a mortgage and you want to rent your apartment, what steps you should take?
Yeah, first off, or do you want to answer?
Go ahead.
Okay. First off, contact us in time so we can manage this. First step will be just to get in touch with us, explain your situation. We will ask you for a couple of documents so we know what we're working with, and also if we can get the job done for you. This is for us usually a step that we've more or less perfected. So you have from the start, you already know if the application is going to go through based on your wishes and goals. If not, we will explain beforehand. We will share the outcome with you. Outcome meaning showing you the different options, also showing you the numbers. So what will be the monthly payments? What are all the fees you need to consider? Are there any other expected costs involved? And then based on a go, no go from your side, we'll move forward. Moving forward means setting up an appointment with an appraiser. so we can get a confirmation on the values and the expected rental income or rental income if it's already rented out. And if that's there, then we also need your documents, and we'll have a go, no go moment again, meaning we'll set up a proposal with a couple of options. We will tell you that Bank A is best in your situation with the following interest rates, with the following mortgage type. We discussed that. You're not bound to our advice. But so let's say you want to move forward with Bank B, then we will also show you the consequences of that. And also if we believe that we can get the job done at Bank B, and then we move forward with Bank B. But usually we will already have these discussions before, and then we get the job done for you by applying. And usually within a maximum of 3 weeks, we have the green light from the bank.
And adding to that, usually when you relocate, then you move somewhere else. This is what we call keep to let, because then you keep the property and you want to rent it out. And then when you want to move to your new property, this is also where we can help out. And this actually is the best possible situation where you do both of these scenarios together, because then because each and every choice that you make with the new property that you buy and the current property that you keep will have an effect on each other. If it's tax-wise, if it's financially, so the maximum mortgage that you can take out, all will have some implication on each other. So what we do is we first also help you understand what your range is for your new house, for the new property that you're looking out for. So you know, okay, what kind of consequences does everything have? And then we'll guide you through the whole house hunting process for your new house. So each time that you find a property, you think, well, hey, this might be my new dream house that I want to live in myself. Again, kick up your feet and relax. Then we can show you, okay, this is what it should. This is what your new mortgage would look like, and this is what your keep to let mortgage looks like. So you have a full financial view of your mortgage options before you even do the viewing, or when you're really excited about a viewing that you just did. You can always make a bid with confidence, and this is also where Sezer already mentioned, we do a very meticulous calculation and check of your financial situation and documents, maybe even more strict than a bank does actually. So what we're able to do in the Netherlands, you don't have something like a pre-approval like you have in the US, for instance, and a lot of other countries. So banks in the Netherlands don't do that, but we come as close to that as possible with our mortgage certificate that we show you. We checked your whole financial situation, we did the analysis, and we feel comfortable that you can move forward with this bid. That's nice for you, of course, because you have the security that you can move forward, but it also definitely helps the seller understand that your bid is very interesting because they got pre-approval from your financial specialist. So then that gives more security in that sense, just to add. Great question, by the way.
And could you elaborate a little bit more? What would be a tax implications if you move away and you want to rent your apartment here?
The only implication it has is that, so you own property, so you need to pay that. But if you move to another country, then all of your assets will not be taxed in the Netherlands, but it will be taxed in wherever you're moving to. So yeah, you only have to deal with the property taxes and the municipality taxes.
Okay. So the next question is like, would I be charged transfer tax if I convert my current house that I'm living in with a mortgage? So you need to pay transfer tax for the refinancing.
Yeah, no. So transfer tax, it's important to know to look at the different words really. So tax is clear, and transfer is exactly that. So it's a transfer from ownership from one person to another person. So if you own property, it's yours, right? What you do with it, that's regardless in that view. So you own property and you use it as your personal residence. Then you move somewhere else so that it's still yours, but you just have another financing on it. So that means that there's no transfer of ownership. So therefore, there's no transfer tax when you convert your mortgage.
And also there is a second part of this question. Would there be a transfer tax if I buy a new house for buy-to-let?
Almost always. You can, that's the transfer tax when buying a house for buy-to-let. So you buy a house for investment purposes. You pay 10.4%. I said almost always, and I know I dug my own grave there, but so I have to explain it now. So it's 10.4 always when you buy an existing building. Only when you would buy a new build property, so that's still in construction, then the property is never owned by anybody. So then there's no transfer of ownership. You're just the first owner. So then you don't pay transfer tax anyway. But buying new build as an investment property that's has different challenges, to put it like that. But yeah, so yeah, basically consider buy a property that you don't use for your own residence, 10.4% transfer tax. Okay.
Also, there is one specific question, and it's so I will try to shorten it. Is there any regulations for non-European citizens if they, for example, buy a first-time apartment and then later they decided to rent it out and relocate? Does any other special regulations apply for them when they, for example, convert mortgage from residential to buy-to-let? For non-European.
Short answer, no. Just to elaborate a bit on that. Banks cannot, let's say, discriminate based on where you're from. What they do have is they could have an additional requirement based on your residence permit, on the type of residence permit that you have. So if you're from outside of the EU, a bank could say, okay, that's we accept you as a client, but since you only have, for example, a temporary residence permit, we want to see a down payment of another 5%, or we want to see, like you could have those types of requirements. Or for example, we're going to check in with you in 3 years with additional questions, and we're going to ask for additional documents. So that could be a requirement, but simply saying no is not allowed based on only the residence permit. Yeah.
Yeah. Thank you. One more question. I'm also gonna try to rephrase it a little bit. If you buy a property which you live in and later you convert, refinance to buy to let, do you always need to renegotiate the terms with your bank? Basically, do you need to pay a penalty for that?
Yeah, well, now probably no. What the terms always have to be renegotiated. So if you take on you buy a property, you live in it yourself, and then you convert it. We mentioned before multiple times that residential mortgages are not buy-to-let mortgages, and that's still definitely very true. So if you take on a residential mortgage, no bank will allow you to rent it out. You move away and rent it out. No bank allows that. You always have to convert it into an investment mortgage, buy-to-let mortgage. So in that sense, yes, the conditions will always change because it's a different product that you take out. Now, that's one part of the question, and the other part of the question was about the penalty. So when you change your mortgage, let's say you have a duration of 30 years of your mortgage, and within that 30 years, you can lock in your interest rate for instance, 10 years. That means in the first 10 years, you know exactly what your interest rate is going to be. That gives you security because you know what your monthly payments are going to be. But it also gives the bank security, because the bank knows, okay, for the next 10 years, I will get from this lovely person, I know what my income is going to be for an X amount of an X percentage. So let's say you bought a house, let's say 3 years ago. That's a fun comparison. So the interest rates then were significantly lower than they are right now, right? So then the interest rates were, let's say, 2% just for the sake of explanation. So you closed an interest rate 3 years ago, 2%, you fix it for 10 years, and now 3 years later, you want to renegotiate your mortgage, you want to change it. What the bank does is they will check, okay, we discussed that you would have your interest for 10 years. So we would get income from you for 10 years. So then they will check, do we lose money over you if you go away? So your interest rate was 2%. Now the interest rate is approximately 4.5%. So the bank is happy for you to move away and give them back their money, because then you can use that money to lend it to somebody else for a higher percentage. So now, if the interest rate is lower with your current mortgage than what they currently charge, no penalty. If it's the other way around, if you close the interest rate for a higher interest rate, and at the moment that you change your mortgage and the interest rate is low, then you do pay a penalty. All that being said, if you're planning to do this, always check in before you make any choices, just at the moment that you start considering doing this, just check in with us and we'll let you know what it really means for you.
Thank you. One more question regarding transfer tax. Is it applicable for newly builds?
No.
So newly built.
No, so when a newly built is in construction, when it's in construction, it's never been owned by anybody. So there's no transfer of ownership. So you're the first owner. So if you buy a new build, no transfer tax in any case.
But if you buy to let,
there's no transfer tax ever with newly built at this time.
Okay. So
what is good to realize, just to add, if you buy a newly built, it means that the project still needs to be finished. In a worst case scenario, that takes 3 years. During those 3 years, you will be paying the mortgage. So what you're trying to save in transfer tax, maybe you're already losing in mortgage payments, and in the end, it could be that you're worse off. Yeah,
and that's again important to know the financial prospects of the investment that you're planning to do.
So you already mentioned in your presentation about Purchase Protection Act, but there is another question related with that. How does it work? So for example, maybe I can give, for example, if I would like to buy in Haarlem, where should I, for example, first look to understand what is the property price should be? I also shared the link for our blog post, so you can find all in the chat. But maybe you can run one more time.
Sure. So we wrote a blog before, or Egle did, to be perfectly honest. Egle made a very nice post about, so you can see the different cities, a clear overview of all the cities that are within this Purchase Protection Act. So there you can see exactly what amounts there are as well. It will be updated as soon as we have the information about the new limits for the next year, for this year. So basically how it works. Let's say indeed you want to buy in Haarlem. I'll give you 2 examples. The first one is very easy. The WZ value of the property in Haarlem is 480,000 euros. You buy that property and want to rent it out. 480,000 euros is more than 389. So if you're over the limit of the 389 in Haarlem, then you can buy the property, take on a buy-to-let mortgage and rent it out, no problem. That's okay. But, so this was the first example. But the other example, of course, is when you buy a property for, let's say, 300,000 euros WZ value in Haarlem. If you do that, then this property will fall under this Purchase Protection Act. So this means that you can buy this property, but you have to live in it. How this works is you buy this property and you have to confirm at the notary before you buy it already. They'll ask you to fill out a form and it says, yes, I'm going to use this for my personal residency. Then sure, there are people out there, and undoubtedly they did not log into this call because everybody is all good and very fair. But there are undoubtedly people that say, okay, sure, then I'll just tick the box that I'm going to use it as my residency, and then I'll just don't. That doesn't work because you have to live in the property for 4 years, so you have to be registered there. And not only that, it's an extensive check that we'll do. So they want to be sure that you live in the property. They do this to keep the housing market a bit more fair. So in that sense, If you buy for less than the amount that you can see right here, then you cannot rent it out. That's basically how simple it is. Buy less than the amount, no option. Buy more than the amount, sure, then you can rent it out.
Was also good to realize that no bank will finance something if
you do decide to buy for less than that and take on a buy-to-let mortgage,
exactly.
because they know that there's no way of you consistently renting it out. So it's also not a good investment for them to offer you this loan. So they won't indeed. And what you can do is, if you do like a specific area, look at the suburbs around it. Maybe you like that as well. Then it might be that you kind of have to shift in your tenant, your perfect tenant. But so sometimes it's good to keep an open mind and think outside of the box when it comes to location.
So the next question is, what are the tax implications on rental income? Are there any deductions for buy-to-let mortgage?
No, there are only tax benefits if you buy a home for yourself. The government doesn't want to sponsor any investments in that sense. So there are no tax benefits for buy-to-let properties.
Mm-hmm. How can I live in a buy-to-let house, and how easily is to convert it? So basically, what is sometimes people ask, like, can I buy-to-let and then after a while move back? So how does that work?
So if you get a buy-to-let mortgage, then the bank is expecting to see a rental agreement. If you don't have a tenant right away, then the bank will give you some time to find a tenant. But usually what we see is within 3 months, you need to have one. You need to have a tenant. Otherwise, the bank will ask you to pay them back the entire mortgage balance. So it's good to have that prepared as well when investing in real estate. Converting it from, is the question converting it from residential mortgage to buy-to-let and back, or
No, this was my addition, because the question is like, can you live in buy-to-let? So every time you would like to live in buy-to-let, you would need to refinance to residential mortgage.
Yeah, and to live in your buy-to-let, there's not really a sense in doing that, because you pay higher interest rates and you don't have a tax benefit.
Yeah.
So as soon as you decide to move back to your house that you rented out first, convert it, because it saves you a lot of money.
Yeah.
Mm-hmm. So now we gonna move a little bit more to keep-to-let. So when you use keep-to-let mortgage, what is transfer tax for your house that you buy, even though it is a second property? It will be, it still will be 2%?
All right, let me try to distill the question here. Keep-to-let, first off there, you own property now, that's yours, you have a mortgage on it, and then you want to move to a new property that you're buying, and that's going to be your new home, and the house that you currently already owned, that's something that you're going to rent out. So you own a property, you go to a new one, but you keep owning this, but you're going to rent it out. No transfer tax, because there's no transfer of ownership. And then there was another part of the question, but I lost it.
Sorry?
The second property.
Yeah, the second property. Yeah, okay. Okay. Now I understand the question a bit better. So your current property, no transfer tax. The new property that you're buying, you're going to live in there. So that's your own property. So you pay 2% transfer tax regularly.
Okay, thank you. Do you know any good areas for rental properties? I don't know this question for which city. Maybe I should skip this and move a little.
Well, no, it's good to address it. It's first off because it's one of the things as well, right? So we had why, what, how. This is the what. So what are you going to invest in? So then it's good to research the location that you want to invest in. So first off, obviously, the Purchase Protection Act. Check if it's applicable there, and if it is, to what amount, and then also determine what your range is. So if your range is over the amount of the Property Protection Act, then all good. If it's not, then it might be good to relocate your your search area, and to maybe again look at the outer skirts, or to look at another area that has the same type of tenants that you look for, but another city. And first and foremost, by the way, when the best locations, we nerd out about mortgages, so we know everything about finance. When it comes to understanding locations, we work all over the Netherlands. It doesn't matter where you buy within the Netherlands, we can finance that. We can help you finance that. When you want to know specific knowledge about a certain area, check in with the real estate agent.
And what is the interest rate on keep-to-let mortgage?
So that is actually the same as buy-to-let mortgages, because essentially the product is not different. But what we see is that some banks, what they offer is to convert your current mortgage to a keep-to-let mortgage, and then they will simply add a percentage of somewhere between 1 and 1.5%, depending on your case.
Mm-hmm. How to best use the equity from an existing home for a keep-to-let investment?
Yeah. So what needs to happen then is, first you will need to take out the equity from your current home, so you have it on your account. That will be based on your own income, your own financial situation, your financial obligations, assets, debts. For example, if you have if you're leasing a car, that will have an impact on how much you can borrow, just to give that as an example. So first off, that will need to happen. And as a second step, we could assist in financing a buy-to-let property. If the question is taking out the equity from a property that you're already renting out, that is also something we can do, and that will be based on your rental income, as well as your own housing costs and the keep-to-let mortgage.
Okay.
I hope that answers the question.
So I have one more question related with keep-to-let. Someone is asking that the bank's website doesn't specifically mention keep-to-let mortgages. How to know if it's possible to keep the current mortgages keep-to-let?
So basically, keep-to-let is a buy-to-let. A keep-to-let, buy-to-let, investment mortgage, 3 terms for the same thing. It's mainly what your construction is on how you want to achieve something. So keep-to-let is not necessarily the type of mortgage that you take, but it's just the action or the process of you keeping your property and buying a new one. So that's the difference there. So every bank that offers a buy-to-let or investment mortgage also does keep-to-let mortgages. Basically, it's financing a property for the purpose of renting it out. The bank doesn't. The bank doesn't really care if you bought it new or that it's already yours. They don't care about that. It's solely financing a property for investment purposes.
I really like this question, by the way, because how you can know if your bank is offering that is just contact us. We'll know exactly what to do.
Well, that's true.
So that's why I like this question a lot.
Yeah, and also if it's not only if a bank can do it. The most important thing is if you can do it, if it makes sense in your situation. Because the question, will a bank do it? It's almost always yes, if it makes sense, if it makes sense in your financial situation. So first know that, and then we'll take care of the actual financing, because we know we can do that. But first and foremost, know your options.
And I also want to mention that for more, there are a lot of questions, and for more like specific situations, especially just schedule a call with us, use the link, and we will answer your questions, because I'm not sure that we're going to be able to cover all the personal situations. So I have one more question here. If you, I think Sezer could elaborate, we already talked before, what would be a challenges for investing in a newly built, and if you would like to rent out? I think you already mentioned that, but if you could point it out one more time.
Yeah, so usually a project takes time to finish. If in a worst case scenario that's 3 years, then during 3 years you don't have any rental income. However, you start paying the mortgage from day one. So that's a risk. Also, yeah, so you're going to put in money because the bank is not going to allow you to borrow 100%. So your money is not giving you any return during 3 years, which is a huge loss. Another thing is that most banks, and by that I mean buy-to-let banks that are offering buy-to-let mortgages or keep-to-let mortgages, they don't allow you to have such a long-term plan, because they also want to make sure that you can keep on paying the mortgage every month. So usually what we see is that you can get a term of around 6 months, and during those 6 months the property needs to be finished. But if you buy a newly built, then usually a development company is making sure that the property is being built. And of course, you don't have any say in how fast they are finishing the property. So you'll just lose money during those 3 years. What you can sometimes see, if you're lucky, if you're fast enough, then you see that a building is almost finished. And then you could have this situation where it doesn't take long to finish the property. So let's say only 3 months, you can buy it. So you only have to wait for 3 months for the property to be finished. And then a bank is willing to think along and give you the mortgage. So that could be a situation to look out for. But it is like searching for a needle in a haystack.
Thank you. Also, I have two very similar questions. So for example, if you buy a home as a first-time buyer and you would like to rent a room, or is it possible legally?
Legally, sure.
It's a little bit not buy-to-let related, but also
well, yeah, it's renting out related. So that makes sense.
This question, by the way, always reminds me of the 90s series Friends, where people are living together.
Yeah. And actually, we won't dive into the specific scripts or Friends indeed, but it's it's out there. Basically, what it is, if you call up a bank and ask, well, I'm buying a house, can I rent out a room? They'll say, no, please don't. The reason why is because tenants have rights. After a certain period of time that somebody lives in your house, they get tenant rights, even if they don't pay the rent at that, well, not for a long time, of course, but they have rights. So you cannot just evict them because you want to sell the house, which means if you then want to sell the house, this person can live in the property and you have to sell the house as a rental property, which I mentioned before, the property value drops down. So this is the reason why banks don't want to do this, because they want to be sure of their investment. So how to mitigate that risk is, if you do rent out a room in your house, be sure to have the tenant sign a clause in the contract as well, and you can call it an eviction clause, that you say, okay, sure, you can rent out a room in my place, but if I'm selling the property, if I want to sell the property, I give you 2 or 3 months to find a new property, and then you have to move out, so you can sell the property freely for anybody who wants to buy it. Then the bank doesn't have such an issue, because then their investment is secured as well, and more importantly, you are secured as well, because then you don't have that risk of having to sell the property with this person inside. because that's just less interesting. So that's the main thing. You can rent out a room in your property. It's legal. So yeah, that's perfectly fine to do so. Just be sure that you're well taken care of administratively.
Okay. Are there any additional taxes you pay if you have already 2 buy-to-lets in other different countries? Are there any other high registration fees, as it's indicated here? But how does the bank work with that if you, for example, have different buy-to-lets in different countries?
It depends mainly on the tax treaty between, if you work and live here and you have properties elsewhere, then it depends on the tax treaty that the Kingdom of the Netherlands has with the country that where the assets are. So it's not a black and white answer that we can give over here.
Yeah.
The second part, sorry to interrupt you, Eglin, the second part of the question is, how will the bank consider this? Well, we want to give you sound financial advice, so it's good for us to know everything about your finances, so we can set up everything correctly, and then that means that we can communicate it to the bank in the right way as well, because they want to know about your personal financial situation as well. So that will be included in the application then. But that's something that we'll prepare even before we do the application already. So we'll make sure that you know everything to make sure that you can make good choices.
Mm-hmm. I see some people are asking again about Purchase Protection Act and for which cities it's applicable. So I'm going to share one more time the link in our blog where you can find it. And for now, I see that most of the general questions are answered, but there are a lot of specific ones for which one I advise to contact us for the link, because as advisors already mentioned, that everything is applicable for your personal situation, and they first need to look at your finances. And I think it's much more interesting for others to hear some general information. And thank you, Karim, for sharing the blog one more time. Also, it needs to be updated based per municipality, because I believe this year we're gonna have a different, the price is gonna increase for different cities.
Yeah, and we already know the number for Amsterdam, but the rest of the cities aren't necessarily, all of them are already published. So as soon as they are published, we'll just update the blog post, and later on you'll receive an email from us as well. We'll include the link to that blog as well, so everybody can see exactly what the situation is everywhere. And again, as Egle also eloquently mentioned, if you want to know something about your personal situation, or you have a question about this specific city, feel free to schedule a call, and then we'll just discuss everything you need to know.
I think it's this is from my part, unless you have anything else to add. Maybe Karim has a question.
Yeah, I was just wondering. Yeah, well, last question, if that's okay with you, is how easy is it to? I think you may have answered this already, but how easy is it to use equity from a property that you own in another country? For instance, if let's say you are from Dubai or Canada or United States or UK, and you want to refinance that to use that money to buy a new property. And my second question is, do you have any tips and tricks that you can share with us that maybe you didn't mention already?
Yes, I'll answer the first one. So what we do is we finance properties in the Netherlands. So taking equity out of a property that is not in the Netherlands is not something we can do. We also don't know how easy or difficult that will be, because the approach in the Netherlands is different than in other countries, and it's mainly because it's based on what your income is. And I know that in other countries it can work in a bit of a different way. To give you an example, before the financial crisis and the credit crisis, following that, you could borrow money in the Netherlands as well based on the amount of savings that you had. That situation, is gone, and it is because of thanks to the Lehman Brothers. I don't expect that situation to come back, to be honest, because to be fair, the market became more healthy. Obviously, we had quite some increases in the market prices, but overall, the market is way more healthy than let's say 10, 15 years ago. So I don't see that situation coming back. Tips and tricks, what we try to do, but that's something we do together. But preparation. If you have all the documents ready, if you don't know which documents to collect, please reach out to us. We can explain exactly which documents are needed, but mainly make sure your documents are in order. That's my biggest tip always. Because then we can explain how things work and make sure that there are no surprises along the way.
And that's the thing as well. We have our experience in buying our own homes as well. So, and we know how it works, and we know what I don't want to call it stress, but maybe just excitement when you buy a home. So, and then what you're doing is you're looking for that, right? So that's where you're all up in going into, and then you don't want to consider, I have to have these documents indeed, what Sezer already mentioned, or I still have to check what my options are with it. I really want to have this, but I'm not entirely sure if I can. And indeed, preparation. Just make sure that it can be so much more relaxed if you know what you can do, and then you go on the housing market. It's kind of when you were a kid and you could go to the toy store. It was way better if you already knew what your pocket money was, but then you knew what you could spend. If you go to the in the toy store and you want the biggest thing, but then you have to see if you can afford it. The other way around is significantly more stress-free, and it's so easy. Just have your know what you can do, and then dive into the toy store of the housing market.
Cool, thanks a lot for that. That's cool. Do you want me to share the results of the poll?
Yeah, please. Cool.
There you go. There's the results.
Makes sense. Yeah.
Everyone's looking for the passive income, and I'm guessing that somewhere else is maybe a lot of that is in Amsterdam, but I'm not sure.
Yeah, that also makes a lot of sense in the area, and that's a good thing as well. The area, you look for an area, you have so much more flexibility, and your hit ratio will be significantly higher. But the passive income, it makes perfect sense, and it's also not mutually exclusive, of course. Everything kind of ties together as well. Yeah.
Cool. That's
great.
that.
Thanks.
No problem. Thank you very much.
Thank you everybody for attending this webinar, and thank you for the magnificent questions as well. It was very good. Egle, thanks a lot for moderating the questions, and of course, Karim, thank you so much for hosting.
My pleasure. My pleasure. Thank you for being here. Oh, sorry. Go ahead, Egle.
And you can also expect to get an email from us with some information related with Uijtdehaage in the coming days.
Very good. All right. Enjoy your evening.
Thank you.
Thank you, Karim.
Thank you, everyone. Thanks for everyone being here. Thank you, Mr. Mortgage team. And we'll see you all in the next webinar. And have a lovely evening.
You too.
You too.
Cheers.
Bye.
Bye.